Hey, what's up, stock compounders? Brad here. So, Andrea Olshan, the new CEO of Seritage Growth Properties, just 2 weeks ago delivered a presentation for the National Association of Real Estate Investment Trusts. The presentation is available here through Vimeo. It's like a half-hour long. And I think Andrea does a really good job of clarifying sort of the value creation opportunity with Seritage Growth Properties. So I'm going to share the notes that I took on this presentation, kind of my highlights from it. Hopefully that provides some value for you folks. So the first question she's asked, what is the opportunity set for investors in Seritage Growth Properties? Andrea says, I was on the other side of this company during the interview process, trying to understand the value and trying to understand what Seritage was and what their value creation methodology was. And it was very difficult. So quite frankly, she's revealing here, it wasn't clear to her as she was interviewing for the new role as CEO, what was happening in terms of how Seritage planned to unlock value for investors in this company. She says, once I came in, I saw the incredible opportunities in making these former Sears boxes into whether it's life sciences, grocery anchored strips, triple net opportunities. And we're going to get into the different buckets of value creation, which Olshan and her team have laid out for Seritage. So the first thing she did, and this was, I believe, Q2 of 2021, which hasn't even ended yet. We're at the end of June here, nearing the end of Q2. And so her first task is to go through the portfolio with the team asset by asset, property by property. There's currently 179 properties that are either wholly owned by Seritage or also joint venture opportunities. So we looked at the market for each of these assets, each of these properties. We looked at the leasing. We looked at the opportunity with fresh eyes. And what that did is laid out that there were 6 main business plans for the portfolio, okay? So 6 buckets for unlocking value with these various properties. So I'm going to visually kind of walk you guys through what those 6 buckets are. This is from the annual meeting on May 19th is when this document came out. So a new chapter at Seritage, 6 primary uses identified in the portfolio. Number 1, grocery anchored retail, right? Number 2, strip center multi-tenant retail. Okay, so multiple retail establishments in a strip mall. Third, single tenant pad locations. Single tenant locations primarily with long-term triple net leases. The fourth one, office life sciences. This applies to the South San Francisco location and the San Diego location, the La Jolla location. And these are some of the bigger redevelopment projects currently on the docket for Seritage. Number 5, residential. Okay, this is the multifamily bucket. And some of these are multiple strategies here, right? You can have multifamily above a grocery store, right? So these aren't necessarily all in isolation. And the 6th is build for rent. I believe this applies both to office and multifamily. That's really what the build for rent bucket is. So, 6 different approaches for unlocking value. And why is this important? This whole 6 bucket framework really came about because institutional investors, right? If there's these properties that have multiple strategies for unlocking value, it's too difficult for these institutional investors to really know what they're buying, right? Or be comfortable with their buying. It's not going to line up with their mandates. So here's the piece here. These 6 buckets translate directly into how you can capitalize this real estate. all right? As everyone knows, the private markets have been incredibly flush with capital in the last few years. They need to put this money out. Debt is incredibly cheap. However, the sources of debt and equity in the private markets are incredibly narrow. And they have very tight mandates as to what they can be investing in with institutional backers, all right? So we want to be a very obvious fit. And this is a way to be a very obvious fit, to have, very clear buckets for each of these locations within the Seritage growth properties portfolio. We don't want to be in anyone's too difficult pile. We want easy to understand portfolios that we can really take advantage of the discrepancy between where the portfolio should be financed from a cost of capital perspective and where the enterprise is being financed, okay? So if we look here, we can see, most of us know where the enterprise is being financed. You've got this term loan from Berkshire Hathaway with this 7% interest rate, right? Pretty expensive money. So what they really want to do is get this debt moved to the individual asset level where, where do I have it here? Premier retail right now, 3.5 cap, okay? Debt for multifamily, sub 4%, right? So if you have very clear, asset types for these properties, you can unlock some of that much cheaper debt at the property level. So that's a big objective for the new management team at Seritage Growth Properties. Now, another important thing, Andrea Olshan really wasn't sure what the strategy was around dispositions, around property sales with the old team. It seemed, it was one-off. There wasn't really a strategy for it. So she wants to be proactive about disposing these marginal locations, any location really that doesn't fit into one of these 6 buckets. The market has been confused about the disposition strategy. She doesn't think there really was one, right? It was more liquidity driven. Do we need cash now? Okay, let's sell this property. Let's sell this property. So Olshan is focused on selling the assets that don't fit into the 6 buckets of value creation. And it may happen fairly quickly, all right? She's focused on getting these properties off the books, right? Getting them converted into cash to help fund these redevelopment projects rather than, letting them collect dust for years and years, which seemed to be what was happening under the last management team. Another thing that wasn't obvious coming in, the opportunities for raising equity. All right, we've talked about the debt. Now let's talk about the equity. A lot of people have ideas in the market, right? It's easy to have an idea in the market. We actually have the properties to execute those ideas on. People are raising a ton of money for strategies and then have to go find deals. Okay, Seritage is sitting on these deals. Andrea says, we're sitting on 20 deals that we can execute today and probably a pipeline of 20 to 30 deals behind that. So it's a strong position to be in. Let's see. This is a great soundbite here. We're all NAV all day long. If you're looking for cash flow today, we're not your girls, right? It's Andrea Olshan and Amanda Lombard on this call. We're not your girls. This is not where you should be investing. But we do have tremendous opportunities, okay? It's really about loan to value. So if we go back to this National Association of Real Estate Investment Trusts deck here, you can see 58% debt to book value. Now, I actually want to find this similar thing here. So you can see here, you get the book value, right? The assets, the wholly owned real estate and the joint venture real estate. I've gone through each one of these. Some of you may have seen a video that I put out last year with Investing with Tom. I think this is pretty dramatically understated, the value of the properties. I think it's probably closer to like $3.5 billion, maybe even $4 billion. Okay, so you compare that to the net debt, and you've got a very attractive kind of loan to value situation with Seritage Growth Properties. So Olshan says, if you're in the 50s on loan to value, book value today without any consideration for value creation, it's an exciting position to be in. And obviously here we see 58%. Like I said, I think the value is dramatically understated. I think it could be somewhere in the 30 to 40% range. So pretty exciting. Well, of course, I own it. All right, so this is not investment advice. I am biased, of course, as a shareholder of Seritage. Okay, so she talks about timelines a little bit. So let's go back to this. And this is a great deck. I'm gonna link to this so you guys can check it out. This isn't the one I wanted. I wanted this one. So, in terms of timeline, in the short term, grocery anchored, triple net, and multi-tenant retail are probably in the next 6, 12, 18 months, okay, in terms of rolling out, in terms of really starting to generate some net operating income. In the middle term, we have some multifamily being delivered. Okay, multifamily is quick to build. It's just a matter of getting through entitlements, right? So the entitlements process can take quite a bit of time. Once that plan is ready to go, once it's checked off, it can be pretty quick to build. Let's see, we're modifying some of the site plans, which extends the timeline, but will be extremely net accretive. Okay, so even though it's going to take longer, modifying these site plans as a result of the pandemic, a lot of these site plans, they're scaling back on some of the office units that they had slated, and they're going to try to double down on multifamily. It sounds like that's the general theme, is to scale back on office, go a little heavier into densification around multifamily. Let's see. Redmond. Oh, let's talk about Dallas. So in Dallas, they had a plan. They're modifying it. They really want to put another 500 units above and beyond the original plan, plus grocery, plus out parcels. Densify into the darlings of real estate today. So Dallas is just a booming market, and they really want to capitalize as much as possible on, the multifamily situation there. Redmond is a plan that we have tweaked. We've identified a tremendous residential opportunity. This is Redmond, Washington, beyond what has been slated, working with the city to see how we can densify with residential. She talks about the property in Hicksville. We have one of the best grocers in the world coming into Hicksville, as well as a tremendous opportunity to add a lot of out parcels. We have modified our residential plan. The market tells you what you need to do, but also the municipalities tell you what you need to do. You have to listen to both. While we were trying to get our plan entitled, the town entitled themselves 1,000 units by the train station. This is the Hicksville property, which checked the box for them on their transit-oriented developments. And so there is no appetite for a multifamily project in Hicksville. So you've got this one big development, right? And it completely alters the type of real estate that would really unlock value creation for Seritage. So, you've got to roll with that and figure out, all right, what is the next highest use now that multifamily is somewhat saturated in the area. let's see. Yeah, I covered that. Anything else? So she says it's going to look like we're selling a lot of properties, okay? But it's only properties that we've already identified as ones that we don't want to pursue, okay? We're being intentional about it. So seeing this increase in volume of property sales shouldn't be a red flag, like, oh wow, they must be burning cash really fast that they have to raise this money, because that was the old strategy, right? It was, all right, we're going to sell properties as we need the cash. That's not continuing with the new management. It sounds like they're going to get rid of everything that they're not interested in developing, right? That doesn't fit into one of these 6 buckets. So that's going to be a shift. Let's see. Oh, so she mentions it's not just these 6 buckets that they've split the properties into. They've actually split the company into really 6 different teams that can really, each team can really focus on each one of these areas of value creation for Seritage Growth Properties. Yeah, it's happening on multiple levels. Let's see. It's a NAV story all day long. It's a value creation story all day long. Again, she beat that drum a few times. Having come from the other side, being an outsider looking in, trying to understand the value. Okay, that's really such a big part of Andrea Olshan's focus here, is to help investors understand the value. Okay, simplify the value story. Seritage has not historically done a good job of that. Demystifying a complicated company for investors. We are looking to undo that and demystify the company, because I think when you understand the component parts, you understand the value. Okay, and that was really Andrea's closing remark. When you understand the parts, you understand the value. So here are the parts. Anything that doesn't fit into this is being liquidated, being sold off. And there you have it, guys. So I really enjoyed the presentation. I think it really gave me a much better comprehensive picture of what the vision is for the management team with Seritage Growth Properties. Curious to hear from you. Let me know what you thought of this presentation. Again, I will link to the presentation in the description. I will also link to the PowerPoint presentation, which is helpful to go through kind of as you listen to the presentation as well. So anyway, guys, just wanted to share this breaking info on Seritage Growth Properties. Nice to be getting a little bit more transparency in terms of what management is thinking and what the plan is moving forward. So with that, I will leave you all till the next video. Take care.